Thank you so much, sir, for the feedback. So once again, welcome to the IoD monthly webinar. This is the first edition for the year 2026 on the topic Key Changes in the New Value Added Tax Act 2025 at 1151. So before we move on, we would like to take a few administrative directives. So this session is a virtual session, and we kindly ask that everyone is muted, and let's try as much as possible to minimize our background noises when we have to speak. And when we are not speaking, please let's ensure that our microphones are muted. And please, if you have to speak, please let's ensure that the background is friendly enough that there is no distraction. And please, if you want us to see your camera or see your face during the your question time, please let's ensure that we see what we are supposed to see. And as much as possible, let's try to limit distraction. Please, in the course of the session, if you have any comments as the presentation is going on, you can leave your comments and your questions in the chat box. It will be read in due course. We are grateful that everybody on the call has registered before joining, so all devices are named accordingly. The recording of this seminar will be shared on the platforms where you got the link to join the webinar or the seminar. So please, we'll share the recording by close of day Thursday on all the platforms for you to have access, for you to take your time and actually digest what has been shared during the session. We encourage everyone on the call to follow us on our social media handles. That's our Facebook, our YouTube, our X, the Instagram, and our Telegram pages. In case you have any challenge in the course of the session, please contact us on +233 0302 732269 or +233 0240 714 798, or send us an email to info@iodghana.org. At this juncture, it's my humble privilege to welcome our president, the president of IoD Ghana, in the person of Mrs. Mary Asari Yeboah, to give us her opening remarks before we bring the speaker that will be introduced by the CEO of IoD Ghana, and we'll move into the presentation. Madam President, please, you have the floor.
Thank you very much, Celestial. I apologize to everyone for not showing my face today. The environment isn't as friendly as it should be. As Celestia said, let's check our environment before we show our faces. So thank you for obliging me to speak without my face. Today, Dr. Dominic Knapp will address some very important issue, which is key changes in the new value added tax Act 2025 at 1151. So it's all about taxes. It's about challenges in the VAT. And this is something we are all eager to know, because when it comes to taxes, we want to be sure that we are not paying more than we should. And if there are areas where we can avoid the tax, that's legal, but not paying taxes is illegal. So we'll learn all we can today. And without wasting time, I'll now call on the CEO, Dr. Alfred Brima, to introduce our speaker formally for today. so that he can do justice to the topic. And thank you all for showing up. Dr. Brima, please take over.
Thank you, Madam President. And let me basically start by welcoming all distinguished participants at this moment, 169. But this seminar into treat us to a meal called Key Changes in the New Value-Added Tax, VAT Act 2025 and Act 1151. Now, for such a topic, and it's a very technical area, I believe we will agree with that. We would need somebody who has both breadth and depth of knowledge and experience in this area to give us a good meal. We looked around and that we're going to get a good meal from Dr. Dominic Anab. Doc, welcome on board. Thank you so much for agreeing to handle this very topical area for us today. With the permission of Madam President, I believe you have the floor.
Thank you very much, and good afternoon to you all. I bring greetings from the Commissioner General of the Ghana Revenue Authority, and to also share with you the reforms on our tax landscape. As you are aware, value-added tax is one of the tax handles administered by the Ghana Revenue Authority. It is on transactions and events, otherwise called indirect tax. This tax has been with us for some time now. It is not a new tax, as some would want us to believe. What we have done is just to reform it to make it very relevant to our contemporary times, and also be able to help us reduce cost. Indeed, the Minister of Finance in his budget last year mentioned that he was going to reform the tax landscape. And he started with the VAT. Why the change? It is often said that why it is broken, fix it. But sometimes you can fix something if even it is not broken. But with this law, there was a need to fix it because there were some challenges. It created what we call distortions in our markets. Because some were charging at some flat rate, others were charging at what we call standard rate, and so on and so forth. So it created a lot of problems. The obvious ones are what we call cascading effect. It increased prices along the value chain and actually created a line of demarcation between the rich and then the poor. And government is trying to actually bridge the gap, hence the reforms. Now, to be frank with you, when it comes to this VAT, there's something we call input tax. That is the VAT incurred on purchases, on expenses. And we have what we call output VAT, that is on sales, what you are selling. Now, the input VAT is deducted from the output VAT. The difference is what you pay to Ghana Revenue Authority. So in effect, it is a consumer who actually pays for the VAT. The businesses which are registered to charge VAT only charge VAT to remit it to the Ghana Revenue Authority. They don't pay the VAT really. Now, before I go into today's discussion, I just want you to appreciate the fact that we had the flat rate traders. With the flat rate traders, whatever input VAT that they incurred, they added it to their cost before charging the VAT. That apparently increased prices of goods and services, creating economic challenges. Then we also had the real estate developers who charge 5%. They also, input tax that they incurred was also added to the cost. So at the end of the day, their prices went so high. Then we had a third category, that is the standard rated persons. They were those who charged VAT, but would deduct their input before paying the difference to the Ghana Revenue Authority. In some cases, those who do exports, they charge VAT at 0 rates. So whatever input tax that they incurred, they deducted it. In fact, they were to deduct it, but there was nothing to deduct from. So they would apply to GRA for a refund. Those who had a thinking that GRA does not refund overpaid taxes, I can tell you that that is a reality. It is normally refunded. So, ladies and gentlemen, the Act The Act 1151 of 2025 has created fiscal certainty, legal certainty, has removed distortions and the cascading problems. So in my candid opinion, and I'm sure a lot of people share this view with me, that this is a tax system that we should be very grateful about, because it has really reduced prices relative to what we practiced earlier. Now, you would agree with me that before the elections, all political parties promised that they were going to remove COVID-19 health recovery levy. So when the government was formed, quickly the minister had to take steps to remove the COVID-19 health recovery levy. This was a levy that was imposed in response to the pandemic that actually shook the foundation of every nation in the world. It was 1%, but you agree with me that 1% can be significant depending on the quantum it is imposed on. So government, true to its commitment, has taken out the 1%. So as we speak now, the 1% is no longer in the system. So if you buy anything and there's VAT and they charge 1%, please get GRA informed, and then we'll quickly rush and ensure that the right thing is done, and then you are also refunded your money. Number two, the VAT also has levies alongside. We have the Get Fund, earmarked for Get Fund activities. Then we have the NHIL, National Health Insurance, also earmarked for health needs. But the law had it that they should be charged first. So when you charge them, you add them to the cost. Then you arrive at a new outcome, a new value, before you add the VAT. That was the story. And this really created a lot of costs. Because you can imagine my price is 1. I add the levies, 2.5, 2.5. Even plus the 1%, the COVID. We'll add all of them to the 1. Then the new value that you arrive at, you now charge the VAT on it. It created some strange confusion. You can imagine if confusion is strange. That tells you how it should be viewed. Now, ladies and gentlemen, now the story. The story is the new VAT Act that seeks to create some consistency, seeks to reduce cost, and seeks to ensure compliance. Now let's look at the objectives. Number 1, to simplify the administration of this tax. So from GRA angle, and persons who are supposed to charge and collect the taxes for us, very simple. Simple because the VAT levy or rate, which is 15%, plus the levies, 2.5, 2.5, put together 5%, are charged on the same base. So we are also saying that it improves compliance. When tax system is so simple, straightforward, then obviously it will enhance persons' desire to pay the taxes without complaints. Again, one of the objectives is to also reduce the distortions which were the case with the previous law. And also to help us increase domestic revenue. You will all agree with me that there's fatigue internationally. So countries are not able to access aid and grants. So the only way to actually help us be able to solve our problems is but to rely on domestic revenue, which can be very reliable and also benign in terms of interest and all those things. Ladies and gentlemen, so these are the objectives. Let's look at the policy change. What is it that has changed? This new act has brought to the fore improvement in cash flow. Improvement in cash flow. And also to reduce compliance burden on taxpayers. The previous law effectively had 21.9% as the effective tax rate. Relative to this one, which is 20%, 1.9% is quite significant. So government really is giving this as an incentive to the business community. That for me is really a welcome news. So in effect, there has been a reduction in the rates. Then we have also removed COVID-19 health recovery levy. When I say we, I'm talking of the nation as a whole. Then we have also recoupled the GET fund and then the NHIL with the VAT, so they are charged on the same base. That makes it very simple and straightforward. Then the registration threshold has also increased. So it was 200,000, now it is 750,000. And we have also done away with the VAT flat rate. Let's look at the rules. Rule number 1, and this is our transitional arrangement. We are saying that all persons who were charging VAT previously, you are supposed to remain registered for VAT until a decision is taken to formally deregister you, or you continue to register if you meet the threshold. Now, the threshold issue has to do with only persons who deal or supply goods. When it comes to services, ladies and gentlemen, there's no threshold for service. But the Commissioner will have to determine whether persons who provide services should register or not. That is not to say that the Commissioner is changing any law or arrogating powers which are concomitant with Parliament. He is only saying that persons that I cannot guarantee that they will be able to charge a VAT and remit to me, I would not register them. So persons whose turnover also falls below 750,000 Ghana cedis in a year, they will also be deregistered. In effect, they will not charge VAT. They will not charge VAT. Can we go to the next slide? Now, conversion to standard rates. We are saying that all VAT flat rate persons whose turnover exceeds 750,000 will automatically be converted to now charge the standard VAT rate, which is 15%. Then you also charge the levies alongside, which is 5%. Oftentimes, we hear people say the VAT is 20%. For simplicity, they are right, because 15 plus 5 is 20. And it's charged on the same base. That is correct. Real estate developers will also be converted similarly to the standard rate so that they can charge at the standard rate. Persons who are registered for VAT and do not meet the threshold and do not also want to come under voluntary registration would automatically be deregistered and migrated to what we call the modified taxation system. Now let's look at the application of the VAT, how it is supposed to apply. So all VAT registered persons shall charge VAT at the standard rate, which is 15%. So VAT, Get Fund, and NHIL will be imposed on the same taxable value, on the same base. Electronic communication services would be charged first, added to the cost before the VAT and then the levies are charged. So this is only a unique area when it comes to CSC. Then when it comes to excise, for manufacturers who produce products locally, the excise will also be charged first before the VAT is done. So these are the two areas where there's a departure. Otherwise, they follow the same system. And trust me, this is so better than the previous law. Far, far better than the previous law. And persons in this industry are really happy about this kind of events. Now let's look at filing requirements. The filing for VAT has not changed. it is paid on or before the last working day of the month following the month in which the transaction release. For example, if you charge VAT in February, you will pay to GRA the difference between the input and output on or before the last working day of March. So it means that you have the luxury, the disposal of the money to turn your business over and over before you go and pay. I call it interest-free loans. Though the customer or the consumer has paid the money to you, so you have the money and you are not paying it immediately to government. So you can turn the money around, increase the value of your business, and pay. That is good news. Then VAT registered person who do not meet the threshold will continue to charge until verified and deregistered. Until verified and registered. So Commissioner General would have to determine your deregistration or create a deregistration route. So verified taxpayers who do not meet the threshold shall file nil returns until they are deregistered. So you file nil until when you are deregistered, then you are no longer going to file. When you are deregistered, you will not charge VAT again. You will not submit VAT returns. And we would have a way of transitioning persons that do not meet the threshold to what we call the modified tax system in place. Ladies and gentlemen, we have heard stories that once the threshold is increased, it means that a lot more will no longer charge VAT, and therefore their prices will be lower relative to those who are charging VAT. But the point actually is that it happens in all tax systems, in all jurisdictions. But eventually, they would also get to where they would be migrated to actually charge VAT. Ladies and gentlemen, let's look at the treatment when it comes to inventory, when it comes to goods. Now, when it comes to the VAT flat rate persons, including real estate developers who are converted to charge VAT flat rate, the standard rate, the Commissioner General may grant the input tax, which are still available, provided they were declared in the VAT returns. But we do know that persons who are charging the VAT flat rate may not have that option in their tax returns. But whatever it is, we are saying that once the goods are in hand and they have been disclosed in our returns, then obviously you would be entitled to claim. But input tax is claimed once. You don't claim it twice. It is claimed once. It has a lifespan of 6 months. If you don't claim within 6 months, then you forever hold your peace. You forever hold your peace. If prior to registration to charge VAT, if you had goods which you bought and then there's VAT invoice prior to actually registering and charging VAT, the law allows that within 6 months you can claim them. That for me is also another novelty in our tax jurisprudence. VAT flat rate persons who are the registered, whatever input tax that they incur, obviously will be added to their costs. Salary registered persons who are the registered shall treat unutilized input VAT as part of cost. Once you are the registered and you are no longer charging VAT, we are saying that you would have to add them to your cost. You would all agree with me that when it comes to VAT, we have what we call the VAT booklets. Now we are saying that if you are flat rated persons, we are looking at the invoice, the VAT invoice. You are flat rate persons. We are asking that to return them and begin to use what we call the standard rate to charge. Taxpayers who are also on the Commissioner General's invoice approved to charge, they have to actually reconfigure their systems so they can continue to charge the VAT. Remember, I said that as part of the transitional arrangement, until you are already set, continue to charge the VAT. It will be wrong for you not to charge VAT just because you think that you shouldn't charge VAT. You haven't met the threshold. Let the Commissioner General say so. Ladies and gentlemen, this is also another important area for mining persons. When it comes to mining, indeed, whatever input tax that they incur, they don't have output to match it against. And here we are talking about persons who engage in virgin mining areas, or what we call the green fields. They are also entitled to pay the VAT and claim. So they will apply and be given a refund. Pay and claim. Pay and claim. Ladies and gentlemen, when it comes to deregistration, how do we go about it? Once you don't meet the threshold of 750,000, you are supposed to be deregistered. So Commissioner General will have to deregister you. There are two ways to go about it. Either Commissioner General deregisters you, or you apply to the Commissioner General, asking Commissioner General to deregister you because you don't meet the condition. So you can initiate it, or the Commissioner General can also initiate it. This is democracy at play as far as taxation is concerned. Again, there are some persons who are doing business, legitimate business for that matter, but they haven't registered for VAT and they are required to register for VAT. So for such persons, when they import anything into the country, our system, the items that we are using, will tag them. Once you don't have a VAT registration documentation, it will tag you that you haven't registered for VAT. And you would be made to pay 20% as what we call upfront payment. But this is by unregistered persons. If you are registered, it doesn't apply to you. Now, persons that import for home consumption, they bought a car to use, it will still tag you. Once the amount goes beyond 750,000 a year, or you divide it by a month, it will tag you. But you have to now let us know that it is not for commercial, so that we can release you from that tag. Why are we doing that? We are doing that to ensure that all persons who are registrable register for VAT, and also ensure that there's equity before the law. Ladies and gentlemen, this is a story. And I just want to say that we haven't really introduced a lot of changes, no. Just areas that we felt that created some kind of inconsistency and fiscal uncertainty. Those areas are areas that we have looked at. I will pause here and say thank you very much for your attention. And I would also now listen and take your questions and respond appropriately. Thank you, and may God bless us all.
Thank you so much, Doc. We really appreciate you. So the first hand up, then we have some 2 questions in the chat box. Then we'll come to the second hand. So Mr. Brown, please go for it.
Mr. Dominic, good afternoon. Hello, good afternoon.
Good afternoon. Good afternoon, sir.
Please, so
Good afternoon.
my question is the flat rate vendors or suppliers. You mentioned if they don't meet the threshold of 750, they are going to be deregistered, and that they will be grouped together into a moderated VAT rate system, if I get you right. What I've realized that right from January of this year, some of them, whether GRA has audited them or not, we don't know of, but some of them have started charging the 20%, the 5% levy, and then the 15% VAT. Some of them have started, and they are also using the old flat rate VAT book. I want to know if they have that right to do that. Thank you.
Okay, thank you very much. If you listen to me carefully, I mean, you have answered the question. They don't have that right. We have clearly come up with a roadmap as to how they should go about the VAT administration. So if they are still charging using the VAT flat rate, I would want you to quickly let me have, I mean, maybe through the management of this platform, get me your number, then we'll get to know those who are doing that and we'll take it up seriously. That is really an offense. It's not right. Is that okay? Number 2,
Okay.
what I said, if you are a VAT flat rate person, we expect 2 things. Once you haven't been deregistered, return the flat rate booklets and begin to charge VAT at the standard rate. That's what I said. And number 3, if you don't meet the threshold as a VAT flat rate person, we will deregister you. In that case, there is another route, what we call the modified taxation system, where we'll place you. Is that okay? And you also begin to do what you are required by law. That's what I said. Because I don't want to muddy the discussion with the modified taxation. I don't want to do, otherwise I don't know, they get confused. Thank you.
Thank you so much, Doc. There is a question in the chat box from Madam Harriet. She said, what rate are the people who do not meet the current threshold charged before they are deregistered? Should it be the flat rate if they were, or the previous rates being used?
No, it's a standard. No, it's a standard rate. Before you are deregistered, please charge using the standard rate.
Okay, thank you. So
Commissioner General has given you what we call transient elevation.
Doc, please, you're on the floor.
I'm listening.
Yes, please, you answer the question.
I'm saying that once you haven't been deregistered, charge VAT at the standard rate of 15%. I call it a transient elevation. They have given you a palanquin.
Thank you so much, Doc. So the next question is, what tax rate is applicable who have been migrated to the modified taxation system? What tax rate is applicable to people who have been migrated to the modified?
In the modified taxation system, there are 3 categories. 1, you pay a fixed amount. 2, you pay 3% on your turnover. And the third one, you will submit tax returns, accounts. So these are the three. But as I said, we can have that conversation because it's a whole lot. And I don't want to also confuse it with the VAT. We just want clarity on the VAT. And that's the focus for today.
Thank you so much, Doc. Mr. Kojo Donko said, good day, sir. Please, are we still claiming input of 15% or 15% plus levies of 5%, making 20%?
Yeah, thank you very much. We are claiming input tax of 15% plus 5%. So that's what it is. So 20%, if you like. So the levies which were not claimable are not claimable. That's the good news.
Thank you so much, Doc. So we have the hand of Mr. Isaac Bonny, Ajimboni up. Then I'll continue with the questions in the chat, please.
Thank you very much, my twin brother, for this wonderful presentation. At least you've simplified it and made it easy. I went off on the road, so I couldn't hear some of it. I want to know, those of us in consultants service, our turnover rate is not the 750,000. So do we still charge a standard rate, or we have to register and all those things? I want to know what applies to us, those of us doing the freelance consultants services. Thank you very much.
Yeah, thank you very much, my twin brother. I didn't know that my twin brother is doing consultancy and you are not taking care of me. Anyway. Yeah, so thank you very much. When it comes to services, there's no threshold. Services, no threshold. So if you are doing consultancy, then you are required to link up with Ghana Revenue Authority. As I said, Community General is in the post services. So we are going to look at the service sector and persons who can register, persons who cannot register for VAT. Because from what you have just said, you probably are an individual running, consultancy. We have to ask ourselves, will you be able to charge an account? If you be able to charge an account, we would indeed get you registered. My twin, you are a chartered accountant and well known. So as for you, grab you because you can account. We know your house. Thank you very much.
Thank you very much, Doc. We know his house, so we can go and hold him liable.
Next.
There's a question from Madam Vera Ntako. He said that, yes, Vera Ntako is asking, does filing taxes by the last working day of the following month mean that the money or tax should have been cleared as well?
No, I don't understand
the question, please.
What are you saying? We are looking at we are in. No, the question is not clear, but I would attempt to answer. What I said was that you are into business, you are into supplies. So you supply today in February. You have taken the money. You keep the money and pay the tax on the last working day of the following month. So you have the luxury to use the money to turn around, to do business. But make sure that you pay when you are supposed to pay.
Thank you, Doc, for answering that question for Madam Vera. Madam Eunice wants to ask, how long does it take for a company to be deregistered? And what does one have to do?
Oh, we have started the process.
To that stage?
No, as I said, you can apply to GRA quickly. If you don't meet the threshold, they should come and assess you and take you off. That can be done. GRA2 has also started the process of the deregistration. So we are in it. Yeah.
Thank you, Doc. Let me take the last question in the chat, and I move to the hands raised. Somebody wants to know, please, can you touch on how this impacts on businesses operating under after? Hello, Doc.
No, I didn't get that. I didn't get that.
Okay, so somebody wants to find out how this tax reform has an impact on businesses operating under after.
Oh, okay. After the African Free Continental Trade. Yeah, so the point is that when it comes to the after, we are really looking at customs. Is that okay? The essence is customs. So once you are paying at a lower rate, or you may not be paying custom duty, obviously your cost is going to go down. So whatever VAT that is going to be levied would go down drastically. So for me, I think that it's a welcome news, and persons who are belong to this category would really have some respite.
Thank you, Doc. So let me call those few hands up. Mr. Joy John Ajoyi, please, you have the microphone.
Thank you very much. Doc Dominic.
Yes, sir.
Yeah, this is your good friend, George. I wanted to find out.
Oh, wonderful, wonderful.
Someone who use ECG, electricity, to produce chargeable.
Go ahead, sir.
To produce chargeable goods. Someone who use ECG to produce chargeable goods. Is that person liable to claim the VAT on ECG?
No, I didn't get that. Can you take it again?
Hello? Can you hear me now?
No, take it again.
I'm saying that someone who use ECG, electricity, to produce a chargeable goods.
Okay.
Is that person liable to claim the VAT and the rest on the ECG?
Yes, yes, yes.
Okay.
You are allowed to claim. Okay. The law allows that.
Thank you. Thank you.
Thank you, sir. So we have the hand of Mr. Francis Gabin.
Good afternoon.
Good afternoon, sir.
Yes, I would like to ask this question that people in the service industry, most of the services that they render to clients, they are on credit. Some of them they have 60 to 90-day credit. So when they pay, they only receive the VAT, the money, including the VAT, when the customers pay. Is it possible that, because I know that in some instances you can apply to GRA for you to do your VAT returns on cash basis. Is it possible that that law can be explained to a lot of people? Because I realize
your question is not too clear. What did you say?
I'm saying most in the service industry, when they issue the VAT receipt or invoice or whatever, they get their monies maybe after 60 days. So by the time the money comes in, they would have been due to pay the VAT. When they pay the VAT to GRA, it means they are pre-financing. And I know that GRA, because I worked somewhere before, and then we went with GRA, agreed that if we are having such a way to go about it is either to do it on cash basis.
Doc is still having a challenge to join. So please, the questions that have been left in the chat box, we'll send them to Doc to answer them, and we'll share it with you by the emails that you registered with. So on this note, I'll welcome the CEO to give us the closing remarks, because it's supposed to be an hour seminar and it's a minute to the hour. that we're supposed to end. So I hand over to Dr. Alfred Brahma to give us the closing remarks, and we'll communicate the answers to everyone who has sent their questions by email. Thank you very much. Doc, please, you have the floor.
Thank you so much, Celestial Head of Operations. Let me just check and see whether Madam President is on, just in case she wants to pick this up in the absence of the Vice President. Madam President.
Yes, Dr.
Madam
Brahma,
President.
I'm on. Yes, Dr. Brahma, I'm on. I'm still on. I didn't go anywhere. I've been around. Yeah, but you can still go ahead.
No, I saw your name, but you know something. Okay.
No, I was actually present throughout. All I just want to say very quickly is the fact that I'm very encouraged by the participation for this month's seminar. We had over 280 participants, and I'm very, very encouraged about that. And I also want to acknowledge the presence of present and past council members, including the IPP Reverend Mrs. Angela Kamenapia, who I saw was on. Otherwise, I hand over to you to do the closing remarks. Thank you all very much.
Thank you so much, Madam President. I think what you have said qualifies for an excellent closing remarks. So I stand on that to basically say that a big thank you to my brother Dominic Knapp and to all the participants. And I believe that we have all enjoyed the meal. And therefore, a big thank you. And we will meet again to treat you to another very good meal in the not distant future. And I'm talking about months. So please keep your eyes, keep your everything. I mean, we're waiting and expecting another seminar that will enrich all of us. Thank you so much, and all the best.
Thank you so much, Doc. Thank you so much. So we'll bring the curtains down on today's session and watch out
Thank you
for
all. Bye for